Hey, welcome to this week's video. Well, it is that time of year again. The holiday season is over and tax season begins. What are the key deadlines you need to be aware of? Well, in this video, I'll walk you through the upcoming deadlines so you can be prepared. I'll also timestamp them so you can refer back to them in the future, as there are quite a few of these deadlines. Of course, we're here to help you through these kinds of things, but it is good to have an overview of what you can expect. So let's get to work. So, first, what happens if you don't file on time? Well, besides not getting a Christmas card from the IRS next year, which I'm kidding by the way, you'll be hit with two main penalties. The first is a penalty for filing your tax return late. This penalty is generally 5% of the tax owed per month that the return is not filed. If you owe nothing or are due a refund, you most likely won't face a penalty, but you never know. But on top of the penalty for not filing, you are also subject to a late payment penalty of 0.5% of the tax amount owed per month that your tax are not paid. Now, an extension can eliminate penalty number one if you file your extension by the requested due date, but it does not get you out of penalty number two if you owe money and you haven't fully paid by the original date. These penalties are thankfully maxed out at a whopping 25% of the tax owed. Also, there are state rules as well that you need to be aware of. The actual calculation can vary depending on your circumstances, so reach out to us if you would like some help on calculating this. The first due date is already upon us, and this is the fourth quarter estimated payment for prior year tax that is due. As a W 2 only earner, you most likely don't have to pay estimated taxes as these payments are already taken out of your check. But if you have a business, including rental properties, you should calculate and pay possible estimated taxes by the due date. Actually, there are four estimated tax payment due dates during the year that I'll talk about a little bit later. The next deadline is the deadline for 1099's NEC forms. The basic rule is you must file a 1099 whenever you pay an unincorporated independent contractor, that is, an independent contractor who is a sole proprietor or a member of an LLC, if you pay them more than $600 for work in a year. This relates to services and excludes items from merchandise like telephone, freight, storage, or similar items. Also, payments of rents and payments to attorneys, regardless of their type of entity, usually need to be issued a 1099. Rent payments go on a 1099 MISC or miscellaneous form, which I'll talk about shortly. But if you pay an independent contractor by credit card, debit card, or using a third party settlement organization like PayPal, you need not file a 1099. Why? Well, because the processing company is required to send out what's called a 1099K if the vendor meets certain requirements for them to send one. A 1099 NEC forms must be filed with the IRS and sent to the vendor by the end of January, and there are penalties, of course, if you file late or miss filing a 1099. If you have employees, you'll need to fill out two copies of Form W2 by the end of the month, the end of January. One W2 must be submitted to the IRS and the other must be sent to the employee. The deadline for both is the end of January. If you work with a payroll company, or if you're like most of our clients where we handle the payroll, this most likely will be done for you, but check to make sure it gets done. There are penalties, of course, for missing the deadline. In addition to normal quarterly payroll tax deadlines, you also need to file your annual payroll tax form, which is 940, related to unemployment tax, and that is also due by the end of January. As mentioned earlier, some payments to vendors require what is called a 1099 MISC or miscellaneous form. This form is most often used to report miscellaneous payments that aren't subject to self-employment tax. In other words, payments not for services. This includes things like rent, prizes, legal settlements, and other qualifying reimbursements. The due dates are a bit weird for this one. If you file by paper, and really kind of who does that these days, the due date to the IRS is the end of February. But if you file electronically, the due date is actually the end of March. However, a copy of the 1099 MISC form must be sent to the recipient by the end of January. Of course, there are penalties for missing these deadlines as well. Besides being aware of the Ides of March, you also have to be aware of the March 15th deadline for filing your S Corp or partnership tax return. Business owners filing for an S corporation or partnership have less time to do their taxes. Why? Well, mainly the reason is because these businesses send out what's called a Form K1 that is used for your individual personal tax return. Note that S corporations and partnerships generally do not pay taxes on their income. That tax is paid at the individual level on the 1040 return. But some states, like California, charge what's called a franchise tax. So be aware that such tax may be due by March 15th and is generally calculated based on your tax filing. March 15th is also the deadline to file an extension for your S Corp or partnership return. Okay, so this is the granddaddy of them all, the deadline to file your individual tax return on Form 1040. This also includes your sole proprietor business and rental property business and LLCs that are taxed as a sole proprietor. Also, some states like California require a franchise tax return for your LLC that are taxed as a sole proprietor or a sole proprietor LLC, so check with the rules in your state. Also, April 18th is the deadline to file an extension for your individual tax return. But remember, it's just a deadline and to file an extension and not the extension for payment, as payment needs to be made by April 18th. As if you don't already have enough to do, your first quarter tax estimates for the current year taxes that are due in the following year are also owed on April 18th. You heard that right. Not only do you need to pay any tax related to the tax return you're about to file, but you must start making payments for the next year's tax return if you meet certain requirements for owing taxes. You'll want to do some calculations to see how much to pay, but you can use some of the safe harbor methods that the IRS provides to help make this calculation a bit more quick. In addition, some states like California require estimated payments for franchise tax, so check on this with your state as well. You will also have to make subsequent estimated payments on June 15th, September 15th, and on January 15th of the following year. We can help you with this calculation, which should be updated actually throughout the year to make sure that you don't get slapped with any penalties for not paying enough. So April 18th is also the deadline for your C corporation tax return and to pay any related tax owed. It's also the deadline if you want to file an extension for your C corp. But remember, the extension is just for filing and not the extension for payment. Note that the deadline does not relate to S corporations even though the word corporation is used. That is because S corporations are treated like partnerships, which are the issuance of K1s and is taxed at the individual level on your Form 1040. As mentioned earlier, the deadline for partnership and S corporations is March 15th. In addition to the third quarter estimated payments due on September 15th, if you previously filed for an extension of your S Corp or partnership return by March 15th of the year, your tax return is now due on September 15th. So make sure to file this and get this done by that date. If you are a C corporation that filed for an extension in April, your income tax return is due in October 16th. This is also the new due date for your personal return if you file an extension in April. But remember, extension deadlines are only deadlines if you have previously filed an extension request on or before the deadline. So once you have taken care of tax preparation for the year, you might want to think about doing some tax planning based on the remainder of the year as well as opportunities that might have been missed in the prior year. Basically, you'll want to take some time to figure out what your tax could be for the current year and how to minimize it before the end of the year. There are some strategies to do this, most of which are required to be addressed before the end of the current year. Some ideas could be to optimize your entity structure, maximize your deductions, look at retirement options, or maybe take some business tax credits or do some business tax credit studies. This is something that we can help you if you're interested, and I'll leave a link below on how you can get a hold of us. So, some key takeaways. Begin to calendar out the tax deadlines and plan to make sure you have time to meet these deadlines. Remember, file your extensions on time and don't confuse extensions of filing with extensions to pay the tax owed. And don't miss any future tax planning opportunities in the current year before the end of the year. Ultimately, paying taxes just plain sucks. But my job is to help make it suck less. So if we can help you in any way, don't hesitate to reach out. So that's it for this week's video. If you got any value out of it, it would be great if you hit that thumbs up, as it really helps me out. And if you're not a subscriber, it'd be great to have you as a subscriber. Until next time, I'll catch you on the next one.